So much to consider when it comes to the insurance market. The State Farm hearing becomes a prism through which we think about it after the fires. Joining us now to discuss more of this is Karl Susman, insurance agent and industry expert and a frequent voice here in Inside the Issues. Karl, thanks for being with us, especially on a big day for the insurance industry.
It definitely was. This was day one of what's probably going to be a 3-day hearing just talking about the potential for having a rate change with State Farm.
Well, I mean, Karl, people think about that. They say, I mean, a higher premium, I'm already paying so much, and a lot of people felt like they're getting a tough time getting their insurance payouts after the fires. And now State Farm is saying we need more just to stay in the state. There's obviously tension, expectations going different directions. Just talk about what we heard from the opening arguments for these hearings.
Sure. It's interesting to point out that you call them opening arguments because it is a mini trial. And that's a strange feeling for me because I realize that this is an insurance industry issue, and the fact that it has to go through a court process seems odd. But anyway, these are the regulations. So there were 3 parties there. There was State Farm, of course. There was the California Department of Insurance and Consumer Watchdog. State Farm basically came out and said, look, we've been collecting a dollar in premium and paying out $1.26 for over a decade. We're losing money all over the place. Our surplus went from $4 billion to $600 million the end of last year, and that's before the wildfires. We need money to be able to pay these claims and to stay in California. Department of Insurance came in and they said, we've looked at all of this information. We think this is very important that we get this done right away. We're talking about over 3 million policyholders in California. We cannot play around with this. Then we had Consumer Watchdog come in and say, yeah, no, we just think this doesn't have to happen. We think actually our expert says that State Farm has plenty of money. They actually should be lowering their rates right now. So that's the brief summary of the craziness that we saw in day one.
I mean, it's a great recap you give us, and we understand the dynamics that will continue to play out. I suppose now when it comes to this hearing, this is administrative judges is overhearing it. So as you say, I mean, I'm a lawyer, so I think about it in terms of a mini trial. And you say it's odd for that, too. I mean, rare to see it this way. And you can speak about that when it comes to the insurance industry in this sort of hearing. But also, how does it play out from here? I mean, who's showing what data and what's sufficient to get the ball rolling for either side?
Well, that's the strange thing. I was watching this and I was thinking, you know, I'm enjoying this because I'm an insurance nerd, right? But I'm not getting paid to do it. And then I looked at the TV and I realized, wait a minute, there's only one group that's actually getting paid to be there, and that's the Consumer Watchdog folk, because our system was designed to be able to compensate them for appealing rate changes, basically. So I think that you would think that that means that, okay, we're going to get a better outcome. But here's the secret sauce. It doesn't matter what the results of this hearing are at all. It doesn't even matter if the judge comes around and his opinion to the Department of Insurance is this is a bad idea, because the Department of Insurance has the final say regardless. So I feel like this theater that we're going through, because this is the way the regulations are written, that we have to go through and sit and then pay certain parties to dispute when we already have a Department of Insurance that's doing that. And let me tell you, this Department of Insurance looks out for consumers above everyone. And if they're going to say, we think this is necessary, I am completely confident that they've seen enough to make them feel that way.
Well, the inconvenient truth of it all is that it's been difficult for California and the Department of Insurance to keep these insurers in the state. We talk about this a lot. The fires became the latest flashpoint for this conversation that you and I have had now for years. We talked about it in terms of catastrophe modeling, how AI could be a part of it. Insurance Commissioner Ricardo Lara has brought forth some of these ideas, but other states are already using this technology. What needs to happen in order for the insurance companies to feel better about staying here? I mean, being able to raise premiums, clearly a part of it. State Farm leaves, maybe it's not enough insurers to absorb the people who need new policies. What's the state of play right now?
Well, fortunately, and I can believe it, I can actually say something is fortunate, the regulations that the Department of Insurance put out, the sustainable insurance strategy, went into effect the end of last year, within days of the new year, actually. And then we had the wildfires in January. If those regulations had not gone into place, I have no doubt that companies would have been wholesale pulling out of California. There would have been no path forward. Fortunately, with those new regulations, there is a path forward. They can start underwriting properly. They can start utilizing discounts and tools and modeling and all sorts of things to really put control in the consumer's hands with regard to how much they're going to pay. Do a little bit of work on your home, save a little bit of money. Do a lot of work to home harden, to make your home less likely to be involved in a loss. You'll have a larger discount, things that, believe it or not, they could not do in the past. So I think we're going to see the market start opening up even after this unbelievable event that we've had. I think we would have already been seeing it more to the extent if we hadn't had these wildfires. But I still believe that based on all of these new regs, we will see the market start opening up. More companies will start writing. And then you know what? Competition does its thing. Prices will come down, and we won't be so concerned if one particular carrier decides they want to raise their rates. Consumers will have the choice to go somewhere else.
And Karl, if you could tell us, I mean, Ricardo Lara, the insurance commissioner, Governor Gavin Newsom, especially after the fires, they had sort of all come together to suspend insurers' abilities to leave for some period of time and say even retroactively those recently canceled policies, or those are no longer canceled. How much latitude do they have to extend that timeline, and how much of it then just needs to be codified into some of the legislation and the policies that you're talking about?
Well, it's interesting because what happens every time there's a disaster that's declared, the insurance commissioner will go and put a stay. So if you're in this area, you cannot be non-renewed for 1 year or 2 years. If you're in a surrounding area even, there are bans. You're not allowed to be non-renewed. This is such a unique situation because in the past, if there's a large disaster, it takes time to rebuild. But it does not take time like we're going to see now. I've spoken to them at CAL FIRE, and they're talking about there being at least another year, 12 more months, before they can even finish phase 2 cleanup in the Palisades. So that's another year before we can even think about sticking a shovel in the ground to start rebuilding. So we are, I'm sure, going to see the department take additional steps to protect people, to be able to have their insurance maintained. But keep in mind, and this is important, even if your policy is canceled, you still have coverage for everything you had at the time of the loss. Changes to your policy after the fact are not going to impact the coverage you had when the loss happened.
And you know, I've talked a lot about the FAIR Plan, the insurer of last resort, essentially the insurance companies kicking in to create this fund, and how it's potentially, overdrawn, or maybe there'd be claims against it that would exceed what it had on hand. That's a simplistic way of the way the FAIR Plan works. But where are we with that, and what people are going to be experiencing from a payout standpoint moving forward after these fires?
Well, FAIR Plan did run out of money, and what they had to do is they had reinsurance, so they had the ability to go to other insurance companies that they had given money to collect dollars, but they had a deductible. So they didn't have enough cash on hand for that deductible, so they went to all of the admitted insurance companies in the state of California, and they said, well, based on your market share, pay this bill and give us the money. And so the carriers are paying their own claims, and they've turned around and they're paying this additional money to the California FAIR Plan, which unlocked all of this reinsurance cash that FAIR Plan needed. So fortunately, everything worked the way it was supposed to. The problem, again, was more money was being paid out. They're saying when all is said and done, we could be looking at a $30 or $40 billion price tag to the industry in general. And let's face it, that's going to come back for all of us at some point.
Yeah, you know, when I spoke with LA County Fire Chief Anthony Maroney right after the fire and asked him how can we prevent this from happening again, he said something that you